Real estate investing is not only about finding a good deal, it's how quick you could act once you find it. This is the number one mistake I have seen over the last 25 years, probably 90% of people not having the available funds to act quick to purchase and get the property done. They find a deal, they get excited, then they scramble to put the money together. They do not understand that they have to be money ready themselves. They have to have available funds ready for certain things during the transaction. Their fix and flip lender is not going to fund the whole deal like they think, but a lot of people just get into the deal and then they try to figure it out. And that's a big mistake because in real estate investing, we're going to go over speed equals profits. So if you don't have available funds ready, you're putting the deal, your profits, and your business at risk. I want to make sure you're successful by being money ready, having those available funds. So I'm going to show you what available funds are, how much you need to be successful, and then how do you put this all together so you have this before your next project. So real estate moves fast. You have to be fast to buy because good properties don't stay in the market long. You have to be fast to rehab it so you could keep more of the profits. And you have to get it on the market. You have to get it on the market and sold so you can get on to the next deal. This is all about compounding interest, but also compounding deals. The more deals you can get done successfully, the more you're going to make, and the sooner your life is going to be what you want. Just remember, every month that you hold that property, 6 to 7% on average of your profits is going out the door. You're going to keep paying for interest, taxes, insurance, and all the other things that accumulate every month. And that's what we're here to fix. We want to make sure you're money ready because, as we said, 90% of the people that we've dealt with over 25 years are not completely money ready, causing delays that should not be happening, and taking money out of their pockets and making it harder to stay in real estate investing. We want to give you all the tools so you could be successful, so you could do this for years, make the money you need, not create the stress that some of the people go through. Make sure you're creating the life that you want. The biggest trap is most real estate investors believe, as we said before, that their fix and flip lender, the person who's going to give them the money, is going to give them all they need or most of what they need. But really what it comes down to is the lenders will give you typically up to 90% of the purchase, 100% of the rehab. So it's a lot of it, but it's not all of it because you're still going to need money for earnest money, which means putting properties under contract, putting down the money to secure the contract, and then talking about down, you're going to have to put the down payment. The lenders will maybe do 90%, so you're going to still have to come up with the 10% for the down payment at closing. Then once it's closed, you're going to have to start pre-funding escrow. You're going to have to get everything ordered that you need to make sure your contractors can get the work done as they agreed to. But if you don't have the doors, the windows, the roofing material ordered, it's just going to delay everything and it's going to cost you more and more. It's going to keep compounding, and that compounding is going to affect your profit. Please don't forget loan payments. Loan payments are going to be due every month. So if your project takes 3 months or 6 months, that extra 3 months is going to come out of your pocket. So you're going to have to calculate this into your cash flow. And lastly, if you're in fix and flips, if you're in real estate investing, you have to expect surprises. Surprises will happen, which means you open a wall and surprise, there's something wrong with the electrical, the plumbing. Surprise, there's something wrong with the foundation when you go look at it, or maybe the roof, whatever it may be. You're going to come across surprises if you're in real estate investing. So investors who don't have the money for the down, the earnest money, for these surprises, what happens? Delays that cost 30 days, maybe 60, 90. Heck, we've seen them go out 12 and 24 months in delays. And not only does that cost them money, probably all their profits, but it's also going to cost them stress and the ability to keep going in real estate investing. The trick to real estate investing, interest, paying it, receiving it, whatever it may be, and even deals, is compounding. You have to be able to do this over and over and over and build that wealth. So if you're stuck in a project for too long, double, triple, even longer, it's costing you money, and it's probably going to be your exit out of real estate. Since it's the number one thing that we've seen over the last 25 years, we want to make sure we can help you correct that. We want to make sure, as we call it, your money bucket, the money that you need for each deal is secured. It's available. It is there so you can get through a project as fast as possible and get on to the next one. Because we know one delay will cause a domino effect. Don't pay your contractor, your electrical contractor, your rough-ins, whatever it may be, and that delays the next person, maybe the drywaller, maybe the finisher, maybe the tiler. You delay these people, and you may think it's just a 1 week delay, but no, you know what happens? all these contractors have schedules. They're going from job to job because they need money too. So maybe if you delay your rough-ins a week, maybe your drywall now is out 3 or 4 weeks instead of when you had them scheduled for the next week. All these delays cost you money. Markets change over time. We want to make sure you're getting in, getting out, making profits, and moving on. We want to make sure you're money ready with available funds. And it's not only contractors you could, be delayed on. We talked about you don't order, pre-order, you get in line, get everything moving for your roof, for your, windows you have to order, your doors, your sinks. Anything that's going to delay a contractor from getting in, getting their work done so the next, trade could come in, get their work done so the next trade could come in and get their work done. We want to make sure that you have the money available and you understand the scope of this. Typically, when we talk about money available, what we talk about is you're going to need at least 20 to 40% of the purchase in rehab. So let's just say you have a house that you're buying for 100, you're putting $50,000 into it. So your purchase in rehab is 150,000. You're going to need available funds of somewhere between 20 and 40% of that. And here's the reason why. Number one, you're going to have to put at least 10% down on the purchase. You're also going to have monthly payments. So the longer that takes, you're going to have, 3 to 6 months of monthly payments. And as we said, there's surprises that come up. You're going to open something up and there's going to be an issue behind a wall, in the basement, wherever it may be. You have to be ready for that. Those things can surprise you, but they cannot slow you down. You have to be able to have the funds because the lender that you set up, the fix and flip lender, they created an escrow account based on your original budget. Your original budget did not include all of these little things that can come up that surprise you. So what your lender is going to do is go, you have to fix that. You have to come up with the money, and you can't let that be delayed, a month, 2 months as you go out and scramble and find the money, put the money together to do that. Because not only are you costing yourself in months and months of interest and taxes, you may miss the market. You may be ready for a spring, put it on the market in spring, hit the market perfect, make your money, but now you're delayed 1, 2, or 3 months. Now you're coming out in the summer and you may have to discount it just to get it sold in the summer. One delay, it happens. Maybe it costs you, a week or two. But pretty soon what happens with these dominoes is that one delay creates 2 delays, creates 3 delays, and the stress starts piling up. It starts compounding on you. Because, we said it's 6 to 7% per month delayed at minimum. So you go out 6 months, and that's a lot of your profit out the door. It's easy to say how one delay can cost you 20%. 2 or 3 delays can cost you 50% of your profits. And when you stop making money in real estate, you stop wanting to do real estate. And there is no other opportunity in the US that you could get into where it doesn't matter where you came from and where you went to school, what side of the tracks, that you're on. Any of those things, if you're willing to put in the work, quickly understand what it takes to be successful in this, you could do this. But you have to do it correctly. You can't buy a property and then figure it out later. That is a key to making this a nightmare for you. Stressed out, burned out, and no money in your pocket. So we said 20 to 40% of available funds. What are available funds? Available funds are funds that you can get to without any hurdles, without going through underwriting, without any delays. So lines of credit, HELOCs on properties that you already own, business credit cards, and real OPM. Real OPM, really quick, is real people there in your community who are looking for better returns. How many people in your community are actually out there looking for a better return than they're getting either at their bank or through the stock market? There's a lot of them out there. You just need to look. We want you to be set up with these available funds, 20 to 40% of your project. Available funds should not cost you any money if you're not using them. Cards don't cost you any money as long as you're not using them and you pay them off. HELOC's the same way. It does not cost you much or anything to set up a HELOC. And once it's there, it doesn't cost you unless you're using it, have money out. Same thing with real OPM. This is money that you could call your friend, your neighbor, someone in the real estate community and say, hey, I need 20 grand to finish this project. Here's a secured note, whatever it may be. That money only costs you if you're using it for those surprises, but it's going to cost you a lot less fractions of what it would cost you for all these delays that these dominoes create by missing the payment, by not having the escrows, by not be pre-funded for those surprises that are out there. So let's recap here. We're talking about speed and making money in real estate. Speed to buy, speed to get that property that is the really good property under contract before your competition, the big companies, get them under contract. Speed to get the repairs done. You don't want to drag this out, an extra 3, 6, or 9 months. That's money that comes right out of your pocket. So we need speed to buy, we need speed to refi, and we need speed to get it on the market so you can get onto your next deal. Remember, this is a compound effect. Just like interest, the more properties you could do, the more properties you could do quick, fast, and get them on the market and sold, the more you're going to make. It's as simple as that. Buying good properties, getting them done fast, getting them on the market, and repeat, repeat, repeat until you get to the point where you don't want to do this or don't have to do this anymore. And really, this all comes down to money, having the money available to do this, to take on not only one, but multiple properties. And yes, your lender is going to give you most of the money, but the rest of the money is really where the success happens in real estate investing, because it's those who have the rest of the money, enough money to get those properties done fast, use their own money along with the lender's money to get these things done. Make real estate investing easier, more profitable for you, but making sure your money bucket is full, making sure you have the available money to make these projects go at the speed of real estate. Check out our ebook below, and we'll see you on the next video.